Good evening, guys. Ken at Tortoise Capital, Nightly Strategy Podcast for March 3rd, 23. Uh, this is a podcast interview that I did with Andrew Barry of Curious Lion. He runs a training design firm uh, that teaches corporate how to do learning culture, and he interviewed me for about an hour on our creativity and leadership work with the Army and with traders. It was fascinating. He wants to do a couple more hour-long follow-ups. He was tickled pink, and I thought it sounded pretty good in my ear. I put the link on Patreon for you. So thanks to all the Creativity 202 guys that helped in the development of our ideas for that. So there's an abbreviated report set out tonight. I left my hard drive at work and I lock up the building for the weekend. So I'll get the complete report out on Monday. The remaining, or the reports I sent out here are what you need really to get going for the week ahead, featuring a lot of swing trade opportunities. And really, we're just going to jump right into the swing trade report and portfolio review. I hope you guys have been following along with this because this has been quite a week, as we'll see here in a minute. So yesterday, Alcoa, we had closed out 2 days ago that trade, and then yesterday, after the gap down, we re-entered here with a tight risk box. Added one this morning at the opening, and then added another one after like an intraday COTA 2. So we've got three positions on this one, and it closed at a new 10-day and 30-day high. And that one is holding 1, 2, 3, 4, 5 on the first position, 2 on the second position, and 1 on the third position. So that's 8R in hand on a 2-day trade. That's not all bad. Now, for the weekend, it would have been reasonable also, to offload this, some part of that trade in here, so you carried whatever overnight risk or over the weekend risk you wanted. That would not be crazy. Your mileage may vary. The Caterpillar trade, oh man. So this was Wednesday on a really tight risk. It closed well the first day. Second day continued. We just enjoyed it. The third day on that little R10 wiggle, I just couldn't stand it anymore because there was no resistance. So why not? And we're holding 2 positions there. And the first position is 1, 2, 3, 4, 5, 6, 7, 8, 9. And the second position is 2. So that's an 11R swing trade in 3 days and more coming. So that's 20R on the first 2. Cliff, same story as Alcoa essentially. After the nice 1 position trade, we took the COTA 2 entry with a tight risk. It paid off. Today we added a second one. It's working hard. So 1, 2, 3, 4, 5, 6. 6 on the first one, 2 on the second one. That's 8R. I don't know why I even day trade, to be honest, after a week like this. So here's the funny one, CVS. As you know, we've been playing these little short bursts, intraday only, on the 30-minute. Yesterday, it flattened out, so we didn't have that opportunity. And we said, maybe, just maybe, this thing could, well, today it reversed and gave me the PSAR flip. So why not just put the MMRB is outside of the daily low, and it closed pretty well. So let's see what this will do. So we're now long CVS over the weekend on a Godzilla. Diamonds, I am just absolutely loving this one. Go back and listen to the Wednesday recap of the decision to enter here based on that triple bottom SSC with a very tight risk and ready to reverse if it failed. But if it doesn't fail, we said, it could get to here or to here. Well, it got to here today and halfway up. So on that very tight risk, you're looking at 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11R on the first one, 7R on the second one, and 5R, 4R on the third one. That's 22R on that 3-day trade. Devon Energy was a COTA 2. We had all this COTA 2 action. Standard risk box. Yesterday we made that entry at the open. Today it continued. I decided to get rid of that one just to reduce some of the over the weekend risk. And energy tends to be more volatile. So that's about +3 and no overnight risk. This is Electronic Arts. Yesterday we closed that intraday trade. And today we took the COTA 2 entry, standard risk. This is one I wanted to hold because it's pushing the 10-day high, and it broke above that 10-day high, so why not? This is about +1 in hand and looking good for Monday. Emerging markets. Yesterday's COTA 2. Standard risk. Holding +2R. Mexico re-entered today after the two positions and a satisfying exit. We took that's actually an emerging dragon, I would say, but I was looking at it as a COTA 2. And that's 1 unit of risk. 1, 2, 3. That's +3 in hand and going. Brazil, just observing. Intel. Yesterday we entered halfway through the day on the COTA 2 and PSAR flip with a very tight risk. 1, 2, 3, 4. +4 in hand and going. And it's cleared all of this crap. And now that's not resistance until it gets to 27.75. So there's another 4 to 5R under normal conditions on that. And this weekend, those daily charts are going to look really good. IYR, the short didn't pan off, so we took the micro gain and stopped and reversed and blundered into this nice trade here. 1, 2, 3. +3. Marijuana, yesterday's emerging dragon with the tight risk box to the bottom of the dragon. Closed very well, so that's 1, 2, 3. That's +3. Clean energy, the SSC, after the short, and then we waited for the SSC, tight risk, 1, 2, 3, 4, +4, and it is more importantly cleared all that, and now the next support, next resistance is about 44.50. Rivian, this was the intraday opportunity trade after that huge gap down with a standard MMRB, 3 positions, and loved it. Yesterday it stabilized. We said, hey, maybe that was really a bottom, so we tried it today with a risk box, and that's holding +2. All of these things were moving in tandem with the S&P. Now, I'm not trading the S&P, except trading on its moves. So that double bottom and a nice 2-day move here is what's helping propel all of these targets So we're getting a boost from the market. So sue us. Treasuries, chimney, crickets. So go back and replay yesterday's video that talks about why that's a good low risk trade. Today, the gap up to here gave us 3R at the open, and then it gave us another 2R to close at 102. And more's coming. So it's +5 in treasuries. Tesla, after the disappointing 2R loss here yesterday, it stabilized. Today, gap up, Z or PSAR flip. So just get back in, hold my nose, +1, and I think it's in good shape. There's more coming. And then finally, U.S. Steel, just the standard reentry, one position at the PSAR flip on the COTA 2, closing well, +1.5. That's about 40R in the last 3 days. If you're not a believer in the 30-minute hybrid day trade, swing trade, I don't know what else to tell you. So I'm pretty happy with that stuff. Sniper trade of the day. 3-minute bars. So this is the turbo version of that same strategy. Here was yesterday's close. Here was a gap up. The OR3 is established there. It failed first, so we get short with the standard risk box here. Checker hold. Scratch. Stop and reverse. Micro gain, stop and reverse. Scratch, stop and reverse. We got some traction. A COTA 2 second position. Exit. Instant COTA 2 reentry. Standard exit. And that was enough for the day. There was so much going on with those 30-minute bars that was a span of control, if I'm being honest. So this first one was 0. The second one is about 0.5. The third one is 0. The fourth one is 1, 2. That's about 2. And that's about a half. So that's about +3 on the turbo. And this is in Alcoa on the 3-minute. And this was just part of the turbo play on the same swing we just looked at, which is this one. So that's just an extra 3R, by the way, which if you want, you could just say, hey, that paid for the swing trade overnight. Well, Dan, I mean, yeah, you gotta take your pick. I mean, evaluate the opportunities and follow your good judgment. But this strategy isn't going anywhere. It doesn't take a lot of prep work, if I'm being honest. All right, I'm going to take a quick look at opportunities today. There's only a handful because most of those swings have now become fully realized. And we've only got these 3 that are better than 2 to 1. So you've got Bitcoin, Brazil, and VIX better than 2 to 1. agriculture, silver, and staples are both still reasonably available. Tesla is still 1.4 to 1. And if we look at treasuries, let me find treasuries. Yeah. So treasuries, you will recall, about 3 days ago, they were 6 to 1, and now they're 0.4 to 1. And that's because that move of the last 2 or 3 days, the teeter-totter has slipped backwards. So I kind of look at it this way, that you got this teeter-totter with a sense of equilibrium, like buy, or maybe sell, and then buy. And what'll happen is when the price is up near a 10-day high, and then there may be some profit taking, and that leads to short side speculation, and then short side momentum, and then profit taking on the short side, and then you see it comes down around the previous 10-day low. All that does for you conceptually is you just set up your brain to think of it as a thermometer scale, and that's at 100, and this is at 0, 10-day high and 10-day low, and that's the midpoint. And when things are in that bottom 20%, and if they hold and start to reverse, well, then you have a nice conceptual risk box right here. And you have 1, 2, 3, 4, 5 to the top of the previous 10-day high. So you get a 4 or 5 to 1 reward to risk ratio. But if that trade were to fail right there, then you're short, and then the size of this move down predicts the size of the next move down because the market is symmetrical. So that's like falling off a log. And then all you do is you watch this thing sell and buy, and that teeter-totter just flips back and forth in that oscillating channel. So to me, that 10-day, that last 10-day range, and where that 10-day high hits and the low hits, gives you a very tradable channel. And we just like to know where we are on that scale between 100 and 0, and know those different levels at 20, 50, 80, and 100. That's essentially the same idea that we're using in the sniper, only we're looking at a compound set of look back periods. Like the first one, the 150-day look back, which is 30 5-day weeks. So that's really, you're looking at 30 weeks, 150 days. And then the 30-day look back, which gives you obviously 30 days. And then a 10-day look back, which gives you, that's this one, the tight tactical play. And then I just break that into 5 days and then today, because that's where I'm interested for setting up a potential, mechanical entry or mechanical stop. So that's the secret there of the sniper, is those three compound look back periods. And this is the conceptual frame of reference. And you've seen me this week apply that across a simple set of the usual suspects. On the report that I sent you, I broke out the this 4 seasons of MACD for you, so you can see that a little clearer. And what I'm looking at on that, so you can read that, is the first two things I look at are the monthly. All right. This column is looking at monthly spring. So when it looks at the spring or at monthly charts, and the MACD has been in the winter and then reverses up to give us a spring, it captures that idea, and so now you could look at Nvidia on a monthly chart, and you'd see that it was in the spring, as is the VIX, as is ARC Innovation. So I like that because that looks like a long-term sell-off that may have turned the corner, which is what may be happening with the ARC funds. So it catches that monthly turn. Well, if this is the zero line on that monthly MACD, the next one I'm interested in is when it goes into monthly summer, because monthly summer is really a long-term goodness, right? So that spring will occur. Whoops, let me get the yellow here. That spring will occur until the MACD crosses the zero line. This is the zero line. So that's winter and this is spring. Then when it crosses the zero line, that spring becomes summer. Well, what I like is I like this segment, monthly spring and monthly summer. Once it's in monthly summer, that's really a long, strong opportunity. And if we can catch them at the turn, then we actually get two legs up, the spring and the summer. When that monthly, so monthly spring and monthly summer are two things that I'm interested in. All right. Now, there's also two weekly conditions I like, and that's weekly spring and weekly summer, and that's the same thing. Now, here's something that I notice now is that Nvidia, which was up 2.5% today, that is good because it's in monthly spring. It's turned the corner. It's also in weekly spring, or weekly summer, excuse me. So that means the shorter term trend is even stronger. When it is only monthly spring, but the weekly is summer, that means it's accelerating. Then I can actually come over and look at the four. I look at all four of the daily charts and their categories. So that's the daily winter, daily spring, daily summer, and then daily fall. So when I look at Nvidia, that's actually in pretty good shape. Like it's had a based on this monthly spring, I know that it's had a long, ugly sell-off, but the monthly has turned the corner. That's good. I know that when I look at the weekly, I'm in the weekly summer, that thing is going to already have cleared the zero line on the weekly and is really looking strong. And then this daily fall is not bad. That just means on the daily that it's pulled back a little bit, and all it has to do is start to recover. And when that daily goes back into the this daily summer, that thing's going to explode. That's what I expect to see next week. Yeah, Dan, your point is made there. You can see, I would go back and just listen to this week from the beginning again, the combination of the auto framer and the market rally. So the market rally, that's the reason, by the way, I start every day by looking at market conditions and seeing where the market is. All those things that were running hard today, they're doing that while the market itself is still in daily winter. That means everything up in here that's in the spring, summer, and fall are all better than the S&P because they have moved farther up in the growing season, and the market just turned today. It was a pretty nice move. But these things are already that's how you find the leaders. That's finding the movers in a nutshell. Very visual, very easy to sort in TC2000. I mean, If you're in the sound of my voice and you want a $1,000 discount on the TC2000 bundle, just send me a note. Uh, no reasonable offer refused. That is really powerful. The guys have done a nice job with this on the Thinkorswim platform with the Owl bundle. If you have that, if that's your preference. But to me, TC2000 is no brainer. That's the best executive assistant I ever had. Thing is tireless. So anyway, I just wanted to just illustrate this point here on the monthly spring and summer are positive indicators for success, and weekly spring and weekly summer are good. I love daily spring and daily summer the best. I don't mind the fall because, if I see summer, fall, summer, then that's good. That's like a COTA 2 on the MACD. I like the daily spring because that thing has turned the corner and it's a long haul up to get to the zero line when it's going to become, at the zero line, it'll become the summer. And then you get 2 growing seasons, which is awesome. All right. Yeah, so like I said, there's only a couple that were in the risk reward. Now, if I go all the way to the bottom, all these that are around 0 and 0.2 and 0.3, those are all things that are pushing new 10-day highs today. And you can see that a lot of these are the ones that we were trading, like Devon and Alcoa, and where's some other ones? Yeah, marijuana and clean energy. Those are now kind of fully valued. All right. Let's look at some market conditions now. We're going to start at the furthest look out at the, where's the 90? Or the 9-day. There we go. So this is the market 9-day. And so each bar is 9-day. Each bar is almost 2 weeks. And the PSAR flip happened back here. And the RL10 did come back, but held support above the all-important PSAR. So that's been a little bit of white knuckle in it. But it had a couple opportunities here to fail, and it didn't. In both cases, the market recovered enough to keep that thing going up. So you're getting a COTA 2, and now it's pretty close to breaking above that limit. So in the next week or two, we see that price get above 415. Not allowed to be surprised, and then it's look out above. So the 9-day is cautiously optimistic. The 3-day, which is like a slow, smooth swing, I really like how orderly that is. You don't get much gap on that. And the PSAR flip here was nice, and it's holding here. And this little recovery these last 3 days, that's pretty favorable. That's going to be enough, I think. We get any kind of momentum next week, that R10 is going to roll up, and then you're going to see that as a COTA 2, like very long, orderly ocean waves, and that should get it above 415 if this momentum is continuing, right? So that's the interesting test coming up. The 150-day, let's look at that. Is that this one? Yeah. We've got double bottom, caught a 2. This one was problematic. This was why we were worried, because this thing was starting to dip below. That makes this an SSC, but it has closed pretty well these last 2 or 3 days, and it's halfway back to the 30-day high. So a lot of those swing trades that we had were already at their 30-day high. The market is not quite as advanced, but it's important to note that the R10 has turned and is, again, cautiously optimistic, and it's just a tactical trade to the top up around 416. The daily, now looking at 30 days, look back, a little bit easier to see here. This little bottom that held at the 10-day low, one strong day of closure, slight gap up, and a strong second day. That's 2 days of strong move that took it from 391 to 404, which is plus 13 on that's a nice 3% move. And even a market move of only 3% is what really propelled those other elements we looked at, the swing trades. And when you can get them on the 30-minute chart, you've ruled out some of the daily noise, the intraday noise, but you are able to get those intraday moves in the sweet spot and then make a decision how much overnight risk you want. The 30-minute chart we saw already, these last 2 days have been very nice. This whole choppy area in here, failure to fail further, 1 day, 2 days of nice move. This was a decisive one today because that's the one that really cleared the top of the channel. If this channel was still going to be in effect, you would have expected today to roll over and get back in, but instead it voted up, and they were willing to hold it over the weekend. And then this is not that much resistance right here, but we'll see. If 406 holds, this thing is, can go back to 415 pretty easily. So we'll see. It's looking pretty good. We'll look at the traders, wrap it up here. Woj brings home 5R today. Gets a little bit of slack in Devon, minus 0.5. Tesla, he got caught in the chop. U.S. Steel. This was Thursday. He took that during a meeting, was in a meeting and missed the move. But NVIDIA gave him a little bit of a bump. This was on Thursday. And then his Friday trades pulled him up into success. With Devon Energies, he was ready and willing and able. There's his 2-hour battle drill. Crushes it for 7.8. U.S. Steel got chopped a little bit. Tesla flat. NVIDIA smashed it. He did 7R net today and 17 for the week. So his 4 symbols and just marking it up, and he's working through. He's a self-directed, self-actualized trader now. He's converting his insights into self-regulating activity, and he's well on his way. That's what 3,000 trades in this technique, going to work every day, filling sandbags, getting the work done. That's what it looks like. We're really proud of his work. Here's Kyun with Intel. Let's see where we're at here. Here's an OR3. It bottom ticked him. A reasonable exit. I think you got to get long here. Then that should not lose money. We should not be coming all the way back down to here. then we're late on the short. So this got him off his feed a little bit here. Got chopped up in his first couple trades. Got some of it back, but not enough to overcome the drag of the first three. It's just a fact that that early morning shenanigans yields into the more orderly move after that first hour. That first hour can be rugged. Sometimes it just goes right from there. Other times you got to wait for that first hour to get done. No easy way to solve that problem. Peter's continuing to practice on the 1 minutes. He's now adding TF, the Russell 2000. It has a little more volatility. Gets a nice recovery. Yeah, that's where he wants to be out. This is a reasonable long right here. So is that. This is late to the game, although it is an emerging dragon. But, that's the more reliable move. Quick scratch or a quick loss, that could actually be a stop and reverse. That's a very good kata 2. I think you got to protect that profit, but then instantly re-enter as opposed to here. So I think we're getting late entries on there. Like we should be long here and or here in addition to there. It's those first moves that feel the hardest to take but which return the best. The reason this one is so good is because you have a solid pivot, PSAR flip, and that leads to this. So you like to catch that a little bit earlier in the wave. Continuing his work on the 1 minute TF. Now this one, the reason this is so good is that you have an observable top, leg down, up, and reverse, and now you got a lower high. That's a kata 2 to the downside, and then when this R10 breaks, the combination of the lower high and the collapsing dragon makes this the ultimate weapon right there. That's where you want to be crushing it short. You're not going to lose money on that trade. I would have, you want to get out somewhere in here after the rebound and PSAR flip. You probably get short here again and take a small loss. And then as long as these things are not breaking out, it's keeping a lid on it, and that the primary trend is still down, then you get this move. So keep practicing, get that muscle memory. He picks up 7.5 on his intraday blind rehearsals. This should be a stop and reverse, but that's a pretty good entry, good second position, good capture, great shot. This is a reversal that should be hit. Still hard to argue with 7.5. Here's Satya on Tesla. Such clean charts here. Here's the gap up in Tesla. It is now telling all those people that were of little faith, hey, thanks for letting us buy inventory on sale in Tesla. Here's the OR3. Here's the OR3 entry, standard risk. He was hesitating. He decided to hold it because the market trend was strongly up. Stays with it. It almost has filled the previous gap, and it was the previous resistance. So he takes 4R and goes home. All right, that's everything I got for us. We'll take a look at swing opportunities. I would take the extra opportunity to listen to, I think maybe even if you just took a look at the last 3 days this week, the opening sequences. I will probably extract just the swing trade portion of the dailies and add that to the advanced swing trade course. But that's been some of our best work here. All right, that's everything I got for you. You guys take good care. We'll see you tomorrow.